Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit the ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. As you know, EUR yesterday shown downward action, so probably you also know the reasons if you do not. So actually it was the statement from the Mario Draghi who said that if inflation in the European Union will not reach the estimated predefined targets around the 2%, so now inflation stands approximately 1.2, 1.3 in the European Union. So if this will not happen in the nearest future, so the European Central Bank in this case will turn back to the quantitative easing program. So it suggests some stimulus, and maybe European Central Bank reestablish the buying back of the bonds on the European market, and that was really negative impact, or like the cold shower, because in the last meeting, it was not really significant time ago, it was approximately couple of weeks ago, the European Central Bank stands that they see some improvement and eliminate the phrase from the statement that it could be needed to cut the rate even more. And on yesterday's statement, Mario Draghi turns back to the former idea and former statement that rate could be cut again, and that was real strong impact on the market. Currently, as we talked about it in the weekly report, that market already stands in some process of the re-estimation of the current situation in the United States economy. So, and right now the common opinion is that market a bit overreacted on recent events, on the turmoil with the tariffs and so on, because the overall statistics, as we said, is not as bad. So, and now we have another factor, but from the other side, but in the same direction. Now it's European Central Bank. And currently market stands at some psychological tension, because the all inputs that stand for euro drop already have been got from the market, from the market. So we have relatively positive statistics in the United States that now is reassessing. We have the statement from the Draghi, and everything, the background almost created. It's needed just the triggering moment, so something that could trigger this collapse on the euro currency. And currently, I suppose, this is just my suggestion, that probably market could wait for a June meeting of the Fed. This will be next week. It's not really big time, a lot of time till this meeting. That really could be the driving factor. It becomes the factor that would trigger the downward acceleration in the euro currency, because Jerome Powell, by my suggestion, should not give any hints on possible rate cut in July, as market right now expect. So as we know, 80% probability already is priced in the current ratio of the European of the euro to the United States dollar, that rate will be cut in July. But my suggestion is that will not happen. And if Jerome Powell will confirm that, this will be the last drop, and market could start accelerating down. So in the current moment, the background is almost totally has been formed, and market is prepared for that, but still, as we would not have this triggering some pattern, triggering factor, market still stands flat and calm on the market. So on the technical picture, what we have, market has dropped on the Draghi statement, stands below the major support, but not too far from this point. So actually, we could say it's coiling around. So currently, we can't talk that definitely has been absolutely broken. So we see just that market stands very close to it. On the 4-hour time frame chart, as you can see, yesterday we talked about two scenarios: the possible ABCD retracement, where I said that we could try and take short position here, so it'll be very attractive, or market could form the butterfly. Of course, we can't foresee that Draghi will say something. But as a result, as you can see, indeed, the butterfly pattern has been formed. But since market just collapsed right to the 127 target with just within the one session, one candle, in this case, is most common thing in the continuation to the 1618 extension. So here we could say at least market should drop to the 1175 and complete this by 1618 butterfly. What will be next? On the hourly chart, guys, we actually have some hint on the possible retracement. So we have the forming falling wedge pattern with a significant bullish divergence, but here market stands not at some major support. Now actually it stands below, and if market will drop to the 1175, it will be even lower, below the 112 area. But still it's forming the wedge. This is not very reliable because if you remember here we also were watching for wedge pattern. This was the free drive. But take a look what has happened. Market just collapsed without any response and even hasn't completed this pattern because it's just starting downward action. So that's why, although we see some preliminary steps for a possible upward action for the pullback here, if this wedge will start to work, personally, I do not have any intention to trade this pattern and take the long position, because overall background right now stands not in favor of the euro, and the euro stands flat and relatively quiet just because we do not have yet the events that will change the opinion on the United States economy and United States situation right now. And that events will come on the statement of Jerome Powell in June, and maybe we also will get some statistics by the end of the June as well. So that's just why market hasn't shown any significant downward action yet. And from that standpoint, if even any pullback here will happen, we'll need to keep an eye on the manner how this will happen. I suggest that this probably will be just retracement, and this retracement could provide us the better chance to go short with some maybe bearish continuation pattern or something of that sort. Because this pullback here, as you can see, definitely not the reversal. This is not the signs of thrust here, very slow and choppy action. It definitely was a retracement. That's why we yesterday talked about the possible taking the short position here. The same story stands right here. Despite that we have the wedge, it's not sufficient to take the long position, and I just would be better treated as possible background for a possible retracement that could provide us a better chance to go short instead of taking long position based on this wedge pattern. So that's our view currently on the euro currency.